Hi, fellow traders. What's happening? Hope you guys had a great weekend. I know we did. Beautiful weather. Spending time with family. That's what it's all about. Love this time of year. This is my favorite time of the year in terms of the weather. And, no, I take that back. The changing of the seasons, let me see. Coming into fall and going into spring are my favorite times of the year. When we're going from hot to cold and everything is starting to, the leaves are dying, they're changing colors. I mean, it's some of the most beautiful sceneries in the world. And then when everything is starting to grow, the renewal, everything is coming back, new leaves are coming, everything is filling out, the flowers are starting to bloom. Those are my two favorite times of the year. And the weather is perfect. But that's just me. I do like a little snow. 1 week of snow a year, I can deal with that. I love to see that. But, maybe 2 weeks, but that's about it. I want to share something with you real quick before we move on. Accountability is essential to personal growth. How can you improve if you're never wrong? If you don't admit a mistake and take responsibility for it, you're bound to make the same one again. This is a quote from the legendary Pat Summitt. If you don't know who she is, she was the women's basketball coach at the University of Tennessee. And they are the program that put women's basketball initially on the map. It all started with her. And this is one of the cornerstones of her coaching was accountability. Coaches hold the players accountability. Players hold each other accountable. And the players hold themselves accountable. And it all starts with admitting you made a mistake, learning from it, taking responsibility from it, learning from it, and then going after it again. And trading the same way. The same way. If we are unwilling to accept responsibility for our trades, the results of our trades, and we want to blame it on the market, or we want to blame it on investment banks, or we want to blame it on big money traders, hedge funds, versus saying, you know what, there's something I need to be able to look at and pinpoint so that I can understand what's happening. And it's simple. It's not rocket science. It's really, really simple. Trading is simple. What makes it difficult is our minds. Our minds can't believe that this is so simple and that all we have to do is follow a process and we can make money. Our minds will not, it seems like our minds just keep fighting us on that. And it makes us think that everything is more difficult and more complex than what it actually is. And I've been fighting this battle ever since I started this to get people to understand, number one, the number one thing is you have to be willing to accept responsibility for any and everything that happens in your trading. It's one of the truths. If the internet goes out, your responsibility. If your platform crashes, your responsibility. Because who chose the platform? Who chose that internet service provider? Who chose not to have a backup? I have a backup on my phone. And that will get me out of any and everything that I need to get out of. But, there's no excuse for it other than, hey, whatever happened, I need to make sure that this doesn't happen again and stop blaming everybody for it. That's how we get ahead in this. All right, so that's one of the cornerstones of what I teach. Admitting that you made a mistake, taking responsibility for it, and just continuing to pick up the pieces and move forward. So looking at this week, we started out really good. We're kind of building up from last Thursday and Friday. We had last week, it's earnings season, baby. I love this time of year. Again, earnings season. This is the time in the market that I love. This is when I'm the most active. The last month and a half or so, I haven't done anything after lunch, really. I hibernate. Now that earnings season is kicked off, starting this week, I'm going to be around pre-market, be around pretty much all day and aftermarket. I pull long days the first month and a half of earnings. And then I go back into hibernation again. Okay, I'm not going to sit here and try to force stuff. It doesn't make sense. We're here to make money, and we got to do it the right way. So you can see how all throughout the last couple of months, this buy the dip has just worked beautifully. You've pulled back to support. There used to be this bottom support line used to run right up through this, if you remember. And every time it hit. So now this kind of worked its way down. And, maybe we're going to have some deeper, wider pullbacks as we make the move up toward $500. I don't know how long. It might get there before the end of the year. Who knows? But, man, this market looks really good. And the bulls seem to really have a good control over it, and understanding that we need deep pullbacks in order to get this thing to rip higher. The deeper the pullback, the stronger the rebound's going to be. So, I've been waiting for 460 for a long time. And we might get it this time before we get a significant pullback. We might get 475. Who knows? But it looks really good right now. 80% of the stocks that's already reported, 80% of the S&P stocks that's already reported earnings this quarter have beat analyst estimates. That's huge. Now, I know we're just starting out, but you have to look at who's already reported. About 8% of the S&P is reported already, but these are the major banks. Most of these are major banks, financial institutions. That's huge. This is a huge sign that our economy is really strong. Now, there may be a big divide, an even wider divide between those that are in poverty and the middle class, because we are starting to see a lot of these guys that struggle, that depended on this unemployment benefits and all the money coming from the government, they're getting evicted now. Okay, there's no more protection. Now, I overheard some deputy sheriffs talking last week. One of them was like, he's already done 15 evictions this week, and they're just rolling in. No, there's no more protection for these guys. Even though they're getting their child tax credit every month, they still aren't paying the damn rent. And, this is going to hurt, but it's like the economy, the market, everybody's ignoring this now. They're ignoring this. People are buying up all these properties. Who the hell are you going to rent them to? These guys don't have jobs. You buying properties cheap now. That's a whole nother conversation for another day. But what I'm looking at is earnings. The reason why I brought this up, earnings is going to be a big driver. If we continue to be 80% if 80% of the stocks reporting continue to beat our analyst estimates, it's going to be a huge driver for the market. Unemployment claims dropped last week. I don't know how, because there's so many jobs open. We can't even go into a fast food restaurant right now because there's not enough people working for them to open up. We have to go through the drive-through. But you've got that unemployment, the decline in new unemployment claims, that's really helping us. The other thing is the spending. The reports for consumer spending has just blown up. I mean, there's nothing that's showing this economy is struggling. Yeah, we have supply chain issues. That's something that's got to be fixed. But I mean, everything seems to be on, going very well. So I don't know what can derail it. I mean, nothing seems to be derailing this market. But I love it. Looking at this right now, we're on a roll here. Technically speaking, we've claimed a 50-day. This thing's going to keep going up. I think we're going to run into some issues between 450 and 455, based on what I see on the chart. But once we get through that, 460 is in view. And, that's going to show some incredible strength here. And this bull market is showing no signs of giving up. Again, this is a healthy pullback. So that's what I'm looking at going forward. It's going to be some good days ahead. Unless something major happens, we're going to keep going. AFRM. This is been my ATM the last couple weeks, and it continued to give it to us today. ATM is a hard stock to trade because at the open, the volatility is really wicked. And what I did here, this thing moves in, $1.50 swings, $1.50, $1.60 swings. My first target really should have been $1.50, but I have to read the price action. I have to trust it. And the price action said we were trying to pull back here, that it was struggling here. So I went ahead and took some profit here, and of course it came back and stopped me out before it ripped up and went to the target I had. But yeah, I could have got pissed off and started throwing stuff and gotten angry, but I didn't. I waited and knew that this is going to give me another chance. If it didn't, I've got a couple other stocks on watch. All right, so we put in the top of this channel. We pull back and establish the bottom of the channel, which happened to be the 5-minute opening range high. And we bounced. And as soon as we took out this channel, it was game on again. And you could see, just took profit along the way. Here was my final target. The mistake I made here was at the 11 o'clock hour, this changed. The top of the linear regression channel on the 60-minute chart readjusted up significantly. And I left my profit target where this was previously. So typically I'll adjust my final target based on the resistance, if it's a moving resistance. If it's a moving average or something that can move, like the linear regression channel here, I typically adjust it. I didn't, but it's still a home run trade. It's still a home run trade. This is still a $700 trade, regardless. Okay, guys, trading is simple. I'm going to say it again. Trading is simple. Following a process, a simple process here. 5-minute opening range candle prints, puts in the high, break the high, enter. Okay? The reason why you do this, there's no thought to it, because all of the thought was done when you vet the stock. When you vetted the stock, you knew where the levels were. So you knew whether this stock had the room to go. So trying to decide whether to take it or not at the open is a moot point. When it triggers, you take it and you go to your targets. Now, when you learn how to read price action, you add another element to it, but reading price action is simple. Whatever it tells you, you do. If it fools you, it fools you. It's not going to fool you every time. Okay, price action is solid. And, it told me I took it off here. So I ended up with a base hit. And I waited. It set up again. Took out the top of this channel. And we were in business again. And that was a huge move. If I had given up on this or quit and went looking somewhere else like I used to, I never would have got this. And here's another thing that a lot of us do. We try to find patterns. Now, maybe that's easy for us. Maybe finding patterns is something that makes us click. For me, trying to determine a pattern or figuring out if it's setting up for a pattern adds a whole lot more, adds a higher degree of difficulty to trading. For me, if I have two straight lines where there's a bottom of a channel and a top of a channel, and I'm going to buy it if it breaks the top, or I'm going to short it if it breaks the bottom of the channel, providing there's room there, it can't get any more simple than that. I don't have to worry about, is this forming a flag, or is this forming a pennant, or what is this doing? Is it a head and shoulders or whatever? Two simple lines. If it breaks it up, we're going up. If it breaks it down, we're going down. Here, too much traffic, no trade. Simple. 1 second to determine there's no short here. If it pulled back. Here, there's nothing. No brainer. Long trade. All right, really simple. So you can see we pulled back, tried to break this again. When I popped in at lunch, I told you only take this trade if it confirms. It needed to confirm over the linear regression channel and the top of this channel. So it never did, no trades. So that was that. Disney was the next trade I took. Here, you have to be patient, allow the trade to work. As long as the technicals are holding, give it time. This traded really, really bad. It traded like a stock on short sell restriction. It wasn't on short sell restriction, but it took forever to get to the target, and then I still didn't hold out to my final target here. Or the first target was going to be 170.25. I put it at 170.50 because look at this, the trouble that we had. Here we bounced, but it never took out the this level here, which turned into the top of a channel. This turned into the top. This was the bottom. We dipped through the bottom of this and got aggressively bought back up. But we still never cracked the 9. We sold off. And so when this happened, I'm like, look, if it comes back again, I'm going to take it at 170.50. If worst case scenario, I got a base hit on this and we can go. But you can see, never did mess up again. This actually held as support for a long time. And then it sold off, got my final target, But I left 25 shares on just in case we sold off into the close. We didn't. I forgot to change my stop. When this hit, I needed to change my stop from 100 shares to 25. I didn't. So when this covered my 25 shares, it put me long 75. So this was just a mental error here. And no harm, no foul. Only lost a couple bucks. But that was just me. It's a lazy time of the day. There's nothing happening. We didn't have any earnings going, so I wasn't engaged anymore. And I actually made that mental error. So I accepted it, moved on, and we're done. SQ really fooled me here. I thought we were going to break out. Here was the top of the channel, but I was waiting for it to break over this 253, which is the high it put in here. And I should have waited for confirmation. That was a mistake I made. But even if I had waited for confirmation over here, it confirmed, but it didn't follow through. Now, it would have been 3 o'clock, and I wouldn't have taken this that late. So this was just, a mistake in judgment here. Not waiting for it to confirm like you're supposed to, especially after lunch. And, that was that. So had one bad trade here where I made a mistake, lapse in judgment. So ended up 705.06 for today. Again, that SQ trade kind of negated the Disney trade here. And, still happy with the day. I'm going to keep focused coming in till tomorrow. Looks like the market's pulling back a little bit now. We're below the market close by about 50, 60 cents. So we're going to keep an eye on that through tomorrow to see if we're going to have a little pullback tomorrow before the open. But today was a good day. And that's all I'm concerned about right now. I'll be concerned about tomorrow when I wake up and log in. So you guys have a great evening. If you want to see this happen live every day, I'm trading live every morning. You see exactly what I do. I will show you how easy trading is if you just think about it the right way. Just think about it the right way. The hard part is getting your mind right. Once you get your mind right, everything is academic. So take it easy, and I will see you guys in the morning.